What's up, everybody? Good morning. Give me 1 second. Alright, we are back. He said hopefully no drama. Huh? See what happens when the market gets slow? It drives the people insane in the membrane. But no, let's see what we get today. Maybe a little different. Usually for CPI, I like to trade power hour. So we'll probably only hang out for about an hour this morning. And then we're going to come back for power hour. That's just kind of been my CPI protocol for however many years. So let's see. So far, we delivered up into, let's clear all this. Let's go to a 4 hour real quick. We finally clear that buy side case. So that's kind of the high that we've been speaking about. That's a daily fair value gap as well. What? 1 hour? No, what was that fair value gap? That's why I got to mark these. Weekly? Weekly, okay. So that's a weekly swing point, weekly fair value gap that we are inside right now. Look at that delivery. We've almost hit the high perfectly. So actually, I'd like to see how this next 4 hour candlestick closes. It's got about half an hour. So at this point, now that we've actually delivered into this, I wouldn't mind a short-term retracement. Let's kind of clear up everything in here. 4 hour gap midpoint. What foot? Let's see which one I'm talking about. February 25th. I'm blind. I'm blind. Don't see it. Up here. There it is. That's funny. I see the weekly here. That's kind of what I had as the objective, that swing point. One hour has closed inside, so I would actually like to see, let's see, what expectation? Maybe 8:30 to be honest. I want to see how this old buy side pull acts. Okay, so we have a 15-minute fair value gap here now. That's that CPI pump up. We've just opened up at 9:30, midpoint's down here. So yeah, let's go back to that 1 minute. We may want to revisit 8:30 open if we're going to kind of give back all of CPI's range. And for me, I just like trading the afternoon of CPI because it just gives us more price action, right? So a lot of times CPI does this. It's very one-sided off the opening. It'll create a large gap. And if we don't have enough price action within that gap to really create targets or anything like that, it can just get kind of messy. Whereas in the afternoon, right, price has already played out quite a bit and it gives us more setups to look for. As far as here, we're going to move that buy side because we understand it's just a low of the weekly fair value gap. 5 minute, okay. So I actually wouldn't mind 8:30. We just left. That's the first time we're leaving this weekly fair value gap. So I want to see if we can leave some type of inefficiency here, especially if that volume imbalance stays open. That's an important one we talk about. As we open here, this candle's made no attempt to even return into the previous candle's close. True liquidity void. We've now hit opening range midpoint. So I'm just watching, are we going to bounce here? Leave this open, give a retracement into that, which maybe that could be where we try to short, right? If we're going to force that. We break through the low. We just don't have any short-term highs cleared in here. If we could have ran some type of high, that'd be nice. Right, we run a high here following CPI, but then protected high, we break lower. Protected swing high, breaking lower. Relative equal highs, break lower. And even on these retracements, right, once again, we create that high, lower high, lower high. So no type of buy side cleared, and now straight lower. See if that first presented remains open. At this point, we're getting back underneath previous day's high. Hitting a few key areas though, 8:30, new day opening gap. The fact that we've closed below the opening range makes me think we may actually want to come back down midnight, to be honest. Huge wick here. What is that? 8 o'clock. Interesting. Okay. So actually, if we did leave this first presented aligned with the opening range gaps midpoint, that to me would lead me to leave the low of that opening range gap, maybe the objective here. So as we say, kind of give back all of this or the CPI pump up. We've hit a higher time frame objective in the form of the weekly fair value gap. It's going to be a pretty significant area in price. We have been running higher, I mean, for quite some time, even though it's been ugly, right? We've been expecting higher prices. So just high resistance liquidity runs. So now that we have hit that higher time frame key area, we may want to actually attack some sell side. We have, right, a lot of lows. Too clean here. My attention would immediately go towards these lows just above a first presented fair value gap from last Tuesday. Especially if we close below, this is a first monthly fair value gap, this red shaded area. So if we were to close below that at some point, that means we're closing below 830, new day opening gap, the first presented, and we're closing below the opening range gap, which at that point, I'd be pretty confident midnight and sell side's the objective. So for right now, let's just watch the first presented here. We have two back-to-back, so this is a case where you would really have to allow for the higher one as well, right? Notice as I like kind of bring up this whole inefficiency from high to low, the volume imbalance is actually the midpoint perfectly. So that is kind of where I would expect price to draw into if it was going to break lower again. Remembering this is also the low of a weekly fair value gap, so that's going to offer some sensitivity as well. Let's add that. Let's go, it's weekly. Just so we understand. Okay. Weekly, yeah, like that. As far as the quarter levels, let's see, we traded up into short, break below midpoint, consolidate around quarter, break below. Okay, so actually this is heavy to me. I like 830. We've already hit it once, but I think we can get it again. Notice we didn't actually come into that fair value gap. So still an opportunity for that. We have too much clean sell side. Yeah, a lot of sell side. Cleared a lot of buy side. Traders that are coming to the chart here at 9:30, they're going to see this large move during CPI more than likely, and potentially want to be involved on that, trying to catch a run higher. So I like the idea of going short. NQ kind of in the same spot. NQ created its first presented, well, just like ES did too. Wow. So at this first presented in ES and NQ was actually created at the previous day's high. Let's see if this popped right. So this is previous day's high, first presented perfectly aligned with that. That's pretty significant. Old buy side pulled as well. Right, with this huge kind of wick that we created, we pushed through that wick. Now we've gotten back underneath it with that premium. So actually, I do like that. Same idea here. Right, yesterday's high is pretty much the consequent encroachment. I'm pretty sure that is exactly the consequent encroachment, actually. Yeah, look at that. So once again, just kind of perfect, right? Stacking of PD arrays, which is why I would expect that area to hold. If we're real heavy, though, that might just be a breakaway. We might just continue to fall, not giving an opportunity to enter on that. Because we do have 830 here, and as we said, new day opening gap. I like the idea of potentially just using this short-term support to bounce up back into the first presented. And then if we're going to be bearish, look for that to hold to send price lower. Wicked out of org. What is org? Organization? High of the weekly up here, potentially. If we were to invert this, then I would start looking bullish, but for the time being, I think that we can find some short-term resistance from this area. We have hit 830 though, so this would kind of be right where we would expect support to come from. We've now repriced the entire CPI move. Right, so from where it opened, closed, that entire fair value gap that was created has now been repriced into perfectly. Notice how we're kind of respecting that. right? Because the low is also a volume imbalance. Which is what I'm thinking. If we do end up holding from here, now that we've completely repriced, inverting the first presented, that to me would be okay for longs trying to get into the weekly fair value gaps consequent encroachment. Oh, original gap. Okay, okay, I see. Opening range gap. Okay, yeah. You're just saying it. Or that makes sense. I never heard that, to be honest. But yes, I see what you mean. All right, so about to retest. Let's see if we can get that retest of first presented. We're gonna hide indicator, hide that. Looking at this, I'm really looking at the volume balance, so I'm kind of allowing for that. That to me is a little bit more important, just because it is that true liquidity void where price has not made any attempt. First presented there, so we'll see if we can hold that. We didn't get the previous day high, however. But I like potentially first presented, even just down into this new day opening gap. We have a rather large range, so like if we want to go for 5 handles today, that would be pretty easy, to be honest. Mm-hmm. 5-minute wick. Okay, so let's wait for the 5-minute to close here. I want to see if the 5-minute closes above previous day's high. Because we said we're coming off of now a pretty strong discount, so if we get back above on this very next candle, that to me would be inducive of another run higher, to be honest. This is kind of that key flip point that we often talk about. All right, perfect delivery there. So that's consequent encroachment as well as previous day's high. It's going to be a key area. We want to watch and see candles. If the candles continue to respect the low of that with the bodies, that would lead us to believe this low here will want to be traded into again. There's midpoint. See if that swing high gets put into place. I'm watching this small volume imbalance in price that we've inverted. Bearish volume imbalance traded through my offer short-term support. We come into it perfectly there. Seeing if we can reclaim that. If we reclaim that, get underneath it, that's going to be an area of resistance that should hold price into a low. If we end up holding from here and actually accelerate through the first presented, that would just be kind of a bearish or a bullish, excuse me, signature. And as we said at that point, I wouldn't mind trying to actually capture some of these highs. Like on the way down, we created a lot of equal highs, relative equal highs. As we said, didn't really clear any buy side besides this. So once we clear that buy side, we get the retracement. But now on the way down, right, we have buy side here, equal highs here, high, high, high. Da, 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 dun, dun. Dun. He said, who is buying this? Newbies. You got to think there's always people, right? There's new people every day in here that are buying and selling anywhere in the market. Seeing patterns they think are there. This is interesting. 804. I wonder what happened there. What's we doing today? We're learning every day. Reading price. Getting better. But now for me, I'll probably, as I said, my CPI protocol has always been to trade the afternoon. So in the morning, I'm not really too quick to try to put anything on. Just because, as we said, it kind of takes a while for price to straighten itself out after something like that, right? Creating a huge gap, refilling it in all the way. to where if you wait for the afternoon, you're just going to have a lot more price action to rely on. You'll have a little bit better understanding. So there's that short-term high now. Once again, right, we're just getting stuck at that volume imbalance that we had pointed out. This is going to be a premium. That's the last premium that sends price into sell side. So as we get above that, that's why that's going to be an important area. And especially because it's a volume imbalance. We've just cleared a short-term high. We made another attempt lower. The fact that we clear a short-term high, try to get lower and can't. Notice how the bodies are really hovering away from this. That's kind of why I'm thinking that if we do invert this, we might get a little short-term run into at least like these equal highs right here. That is what would be my short-term buy-side objective. Let's see, a quarter level of this would be, so we have those highs, so kind of these highs as well, because this swing point is exactly the lower quarter of the weekly fair value gap. But as long as we can hold first presented, I'm waiting to see, right? Closure below this, I think we will then use that, especially because we've already been using it as an area of support. So if we can get that closure below, it should allow price to actually start slipping more, clearing that low. And as we said, we have that new day opening gap here. That's kind of what I would expect the draw to be. If we're going to attack a low here, return into new day opening gap. For the time being now, we're actually holding its midpoint, right? So we got under it, we get back above it. That's what these candle wicks and bodies are holding it now. Opening range gap's midpoint. Wicks are going into the volume imbalance, body holding midpoint. Bullish volume imbalance here. My Twitter is no, it's actually True Trades. TRU_trades. I have it linked in my YouTube description, I believe. Should be. Okay, so not much to do here. We're just watching now. If you were short here on this first percentage, you would want to see to feel comfortable if you're gonna cash this out. You want this volume imbalance to give way. As long as the midpoint and volume imbalance is holding, this is just a little sketchy here. Slow, okay. It's kind of expected here. I'm also kind of eyeing a run higher actually if we were to invert this, because 930 creates what we would classify right as a kind of a Judas swing. 930 immediately goes lower. So if that's the false Judas swing fake move, it's going to want to actually attack 930's opening price. This is interesting, however. So first candle body, closing inside the volume imbalance. As we said, we clear that short-term high within the first presented. In reality, this high here really will try to be like the protected high if we're going to start breaking lower. Get inside. Wicks can't get back into the first presented, so I'm still watching to see. Closure below the volume imbalance, I think, sets the stage for that run lower. Do you chart micro? Not really. Right, most of the entries are going to come on ES here. If I'm going to enter on the micro, I'm still going to use the actual ES chart and then just kind of enter on those levels here in the micro chart. Because you'll find that the micro chart sometimes moves a little bit different than the actual contract. Like here, actually, right, you could see there's only one fair value gap. Whereas in the actual contract, we had two as we left that weekly. Micro, there's only one, which ends up holding still because it's the first presented, but that's just kind of the discrepancies. And then it's actually already cleared. Oh no, it didn't. I thought it cleared that low. Oh, I'm tripping. Everything I said, take that back. I was clicking M and Q. Same idea though, the volume imbalance on the micro isn't there. Cool, okay, so there's that low as we said, right? Closure below volume imbalance sets the stage for continued price delivery lower into potentially swing low, and then new day opening gap here. 830 is going to act as a pretty strong area of support, so we'd want to fall right through that. Oh, right there, as we did, right? So we kind of accelerate right through that, picking up the low, new day opening gap. Opening range gap low now is what I would expect next, coming off of first presented here, bearish. Cool, so there's the low. So now from here, let's see. Right, beautiful there. As we say, we're using that, getting stuck. Candle body closes on the low first time, early indication we can get below it. Next candle closes below, boom, and then that's when we can release finally, delivery perfectly into opening range gaps low. This volume imbalance is going to be pretty important actually. Let's see if that stays open. If that stays open, I think that would actually set the stage for more sell side targets. So potentially midnight, as we said, we have midnight level here. Where'd it go? Pop it up. Oh, I deleted the indicator. Midnight level here. And then we have that swing low from whatever this wonkiness was at 804. We got a crazy 804 candle that kind of cleared sell side and buy side. But if we do leave that opening range gap to the downside, as we said, we're now breaking below all these key areas. I think that is an area in price that should hold this bearish fair value gap right here, especially if that volume imbalance remains open. So that's unfortunate, okay? So we're unable to actually leave that open. Notice where the volume imbalance was formed, however. So I want to see if the new day opening gap offers us resistance or the new bearish fair value gap that has been formed now. For the time being, perfectly being held at opening range gap low. If we want lows here and then midnight, we would want this fair value gap to hold us and make no attempt to come back up into the original first presented until we clear out the sell side. Yep, short from first presented, clean. So now we wait and see. Invert this again, I think that would be an opportunity to actually try to long back up now, because we have cleared some sell side. We've delivered perfectly into the low of the opening range gap. And if we're going to start overtaking new day opening gap again and the 830 level, that to me would be an area that you can then use to try to go back up. So after taking the short from first presented into the low of the opening range, if we're going to get that retracement now to attack some highs, it should be from here. Would I prefer Asian low or midnight if I was short? If I was short, let's see where Asian low is even at. Like here. I would go midnight, to be honest, just because, right, low hanging fruit for me. So I would take like most off there, and then I would actually leave a runner to see if it wanted to come all the way back down into this first presented, clearing these lows. But we've actually inverted this, so I think this is going to go long. Hold up. Let's hide the indicators. I want to see if we close above. Closure above this fair value gap here. Hello? What the? Oh, it's locked. Okay. Oh, wait. My chart broke. What is happening? That was weird. Okay. There we go. I think we're good. Now we got it. All right. So yeah, if we do invert this, because what are we going to do? If this closes above, it's going to leave a bullish volume imbalance back to back. I think that would hold us and get us into buy side, to be honest. That's what I would be looking at. It's done the work of completely repricing. This will be pretty interesting, however. So the original volume imbalance is going to be important on the way back up. We're going to use it as support. We break below it. This is the first time we're returning into it, right? When this candle, oops. When this candle closed below, it actually made no attempt to return into this. So we reclaim it and then we deliver into the sell side. First return into that, we still can hold from here and actually break lower again. So if we do close above this, that'd be even added confirmation. We do have the bullish fair value gap. So already I would be kind of okay, right? I wouldn't mind an opportunity to try to long this potential inversion to get some highs. Especially if we were to close above first presented, or excuse me, volume imbalance here. First presented, however, is going to be a pretty important speed bump, I would think. So as we trade up into that, more than likely we're going to get some type of either rejection or hesitation / consolidation within this premium. I don't mind the idea of trying to catch that to go higher, actually. Let's see. Original consolidation. We have the 830. I would probably try to use 830. Okay, so first presented, no break in structure. This would be an anticipation entry, so it's a little bit higher risk because we don't have true market structure break, but I like the consecutive bullish candlesticks. And I would really try to use 830 with the low of the opening range to get the buy side. So we could try that. First one in the morning here. Right, as we said, no break in structure, so this one's a little bit lower probability because we don't have the true market structure shift, but we have the inversion, we have the 830, we have the original sell side, and then we have the actual displacement with the candlesticks. So when we're creating inversions, I like to see, right, displacement. We've left a bullish fair value, yep, aligned. So at this point, I want to see first presented actually hold us, create some relative equal highs, give the retracement into the entry, and then run. If we kind of run from here, we may actually have to just use the first presented because now we're going to have a bullish breaker, right? A low, a high, a lower low broken, especially if we displaced above the first presented. So for the time being, I'd actually like to see first presenters hold us and give us a retracement entry. And we're using 830. We can actually just use mid. We'll just use the consequent encroachment of that to get us up into the buy side here. Closure above. So now let's see if we get a closure above, confirming the break in structure. Which in that case, let's go to a 2-minute. We may have to change our entry 5-minute hold. So that's bullish as well. Yeah. Okay. I'm going to allow for a deeper retracement actually. This weekly fair value gap is going to be a pretty key area. So when we trade up into it, I think we may be able to get that retracement into our entry. If not, and we just run into buy side, that's kind of right example of a missed opportunity. Price goes where we expect. We just don't get entered, and that's fine. Still up all day. Cool. So let's see. It's about to close. Yeah, that's a breaker. So now we have the break in structure there. Notice we did it with another volume. Oops, with another volume imbalance. So we're starting to put in discounts on the way up. And we've actually closed above this volume imbalance. So the first presented here may be all price wants to use actually to remain bullish. We might not get the deeper retracement. I would favor a deeper retracement, so I'll leave it. Just because if we're going to use first presented, right, stop would have to be... No, if we were going to expect first presented to truly hold, it should not come back into this. This will be a breakaway gap. And it'll run into this. I want to see, as we said though, I actually want the weekly fair value gap to hold us, get back below the first presented, hit our entry at 830, and then get above. But as we said, if first presented is kind of what the market is going to use, these actually fair value gaps will probably be breakaway gaps until that buy side is attacked. Message retracted. Oh, what did you say, Thune? You're trying to hide, I see you. Cool, so we hold that weekly. I like that. As you said, entry for us, 830 paired with that fair value gap. Previous day high though now, so that's kind of what I'm thinking, right? If we're gonna hold from here, we've already put in the bullish breaker, which is gonna be this candlestick. Like this. So if we're not going to want to give that retracement, breaker's gonna hold us paired with previous day high, paired with first presented. We're being squeezed between the weekly and the first presented here. Right, you can kind of notice that. Look where we've just closed that. So we closed perfectly on that weekly. Quick rejection again into first presented. So let's see, right, breakers here as we mentioned. I'm just going to move that. But this volume imbalance here. As a matter of fact, if we were going to be extremely bullish, we close above, we get the retracement into the low, and then we close above again. That's going to be really balanced as a inversion. I think we can get some painting out the lines, but if we're going to be balanced here, this low will actually hold us. This low will hold, it'll accelerate through now this bearish premium, so it's going to hesitate, act as a speed bump, but then it'll trade through that and reach for the buy side. Leaving that low, right? Because now that we close above again, the high and the midpoint is going to be the key sensitive areas that price should respect if we're going to maintain that bullishness. Once again, closing right on the weekly, right? So not random in here. Yeah, NQ is just right at its first presented. It's the same idea. It's not above its yet. Instead, it's created the equal highs there. I'll show you guys real quick so you guys can see what I'm looking at too. So as we said, that's the original buy side. That's previous day high, first presented here as well. So an NQ struggling at first presented. We actually cleared, did we get that low? So that is a little bit SMT. I didn't notice that at ES. These lows here, right? NQ is able to run out that consolidation low at 816, which is this low here. So we do have that form of potential SMT actually. Holding. Okay. So let's see. I don't mind this. I'll leave this here. With the understanding that, as we say, if we're going to remain bullish, previous day high may actually be all that price wants to, try to get back into. I like that weekly fair value gap that was holding us. That's what I wanted to see. So right, we accelerate, we close above the high. We then give that retracement into where we would be trying to enter. This may be like an OTE as well, kind of the classic entry mechanic. Let's see. Main fib, OTE would align with that fair value gap pretty nicely, the volume imbalance. So I don't mind that. Yeah, let's see. At this point, I'm looking at the weekly, looking at this low as well. I feel like if we can get underneath that low, we should get the retracement. And then it'll just be a matter of if we're on side or if price wants to attack lows once again. Yeah, I'll be live for the PM session. So the morning one will be a little bit shorter. We'll probably only be here till about 10:30. For me, I like the afternoon better for CPI. So we'll have one opportunity this morning. If we get stopped on this, that'll be all for the morning, and then we'll come back in the afternoon. Usually when we have like large or heavy, we'll say very high impact news events in the morning, so like an NFP or a CPI, for me, I'll like to trade the afternoon. Kind of let that morning price play out a little bit more. So consolidation here, that's still fine. As we said, we're trying to get the retracement into entry and then the expansion. That low is still holding, however. So that will be the protected low if we want to break through. Previous day high as well, so that's going to be a very key area. Quick question, how do you put the positions? Oh, it's the, so like you have to go to your settings, and then you'll go to, where's it at? Right here. Order positions and alignment. All right, you can have them right. Some people like the center so they could see it within the chart like this, but to me that just kind of takes up a little bit too much space for my liking. It's good for like videos, I guess, so you could see. But like when we're actually just watching this, it gets a little bit crowding. Left is just weird as hell. I don't like that at all. So I always go right. Go right, and I don't have the line. Some people like the extended lines as well. I guess we could try that. We'll do the extended lines for y'all to see. A little bit easier to see what the positions are. So far, that's exactly what we would kind of not want to see, right? We're respecting this protected low. This will be the protected low because, as we say, as we create the inversion, we reprice into the low and close above with that one candle. This technically has become rebalanced. So if price does not want to give a retracement, it's going to hold from previous day's high and today's first presented, and it's going to deliver us into buy side, which, as we say, at that point, we'll just miss it, which is okay. I liked a little bit of a deeper retracement. Almost like trying to wick something here, but seeing this actually, now that I look at the 5 minutes, we may not even get that entry because there's going to be a 5-minute here. So if we close above this, I think that'll be used as the then support, right? The inversion. So we really would need to hold from the weekly fair value gap. Give a deeper retracement. Hold from there. Let's go, Scotty. Love to hear that, man. That's all we want. Help others figure it out. Took me a very long time because all I had was ICT, which is good. But kind of like we were talking about yesterday, it could be a little bit hard to digest, right? The long rants. So if I can speed up the process even just a bit, I'm glad. I do think it's good to like see it, right? Play out live by live, candle by candle with the explanations. NQ still struggling. It came back up into its first presented again. Rejection, however, so that's fine. I actually wouldn't mind that because like we're creating relative equal highs here. So if we can continue to consolidate in here and then we give our retracement, it's going to just give us another area of buy side to try to target on the way up, which is why I'm still okay trying to hold this here. It may not retrace, but this is where I would want to enter from here. So this is kind of where we understand that first presented may be all price wants to do. And if that ends up holding us, as you say, this will actually be a breakaway gap and price will run. So we're allowing for that. We understand that. But as far as the actual entry itself for like the risk to reward and what I feel would be the best protected low, the highest probable protected low, it would be this swing point. Since that's the case, I like the idea of trying to enter on a retracement into 830. So just kind of personal preference, right, with the risk and whatnot. Whereas, yeah, it'd be perfectly valid, like if you were trying to be extremely aggressive, to use previous day's high, stop underneath the midpoint fair value gap, which is this candlestick, to target buy side, or right, these buy side up here. So like this is still valid. To me, that's just less probable. So if that works out and runs, I'm fine not being involved. You're already long. Yeah, as we said, right? If you're already long, this should be a breakaway. So if you're long already, that's fine. We have the breaker, we have all that. I just require a little bit more. I want a little deeper retracement. Understanding we may not get it, and that's fine. It's like for you, if you're long, I would like that fair value gap to be bag. Bag? What does that mean? But yeah, if you're long, you wouldn't want to see this actually. This should be a breakaway. Because it's going to be balanced. Displacement below, displacement above, same fair value gap. I'm expecting more of like a consolidation type delivery rather than full continuation, right? In the full bullish market, as we create this breaker, we're just going to use the breaker and then continue to accelerate. That's where the mitigation gets formed, right? First breaker, low, high, lower, low, broken. And then it'll be low, high, higher, low for the mitigation block that's broken. But for me, I'd like to see, especially early morning, more so of the deeper retracement, right? So it's more so like the original liquidity. We clear that original liquidity, we displace above it, we retest the original liquidity, and then we clear whatever highs we created to then use that. This is more so of the profile that I would want to see this morning, rather than the full bullish continuation. Is this the Viper model? I guess, yeah, in a way you would say that, right? So it's the bearish fair value gap that gets inverted with the bullish fair value gap after clearing some form of liquidity. I kind of forgot he came out with that, to be honest. It's funny because like I've seen this, like this has always been a pattern that I enjoy, or that I guess have created into a model. So when he came out and kind of gave it a name, it's just like, I guess satisfying. Because you're almost creating the concepts, whereas he never pointed that out. That's something that I found, and then he came out and explained that that is an actual PD array. So that's just like confirmation for those entries, which is nice. ICT Venom, there it is, not Viper. Figure it out, perfect. I'm not here agreeing with you though. That's also my fault. The Venom, that's what it's called, yes. Like I said, I don't keep up too much, so I do lose track of all the PD arrays that he's continued to release. Like I know about, let's see. The Marvel character. He said, what does he have to do with it? You a Marvel Rivals guy? I tried that recently. It's just like a carbon copy of Overwatch, to be honest. They just ripped off Overwatch. So as I said, I actually do kind of like this delivery here because we're engineering some liquidity that we can take if price chooses to run lower from here, right? If we can keep these highs in place and actually return into our entry, that's going to leave equal highs to then be a potential target on the way back up. NQ, pretty much in the same spot still, right? That first presented here, NQ, really holding. But to me, I still like that. That's conducive of a drop lower, leaving behind buy side to then trade through and attack higher highs as well. So for the time being, we're going to leave this entry. Still like it. And I think it'll be something to where if we are wrong, it's going to be wrong quickly. And that's always what I like to see. I don't like to be in trades for too long. Unless I'm trading higher time frames, of course. More swing positions. But as I've come to learn, my best entries, if we get tapped in, it'll move away quickly or it will fall through quickly. CPI, the actual news has no... At least I will always say the actual news itself doesn't really have any effect. It's just used there as kind of a scapegoat to drive price where it wants to go. The move's already predetermined in my mind. And that's what I've always believed. Right, so it's almost priced in already. So the news is simply used as a catalyst to send price where it wants to be or where they want it to be. The fundamentals of it aren't really that important. You don't think we'll touch midnight? I mean, if we end up running, we would have to close below the opening range gap. That to me is, we'd have to get below that. The fact that we couldn't do that is why I'm believing that price actually still wants to maintain some bullishness, because as soon as we hit that opening range low, we get straight displacement, right? It rejects that immediately and trades right back above its midpoint. And now this candlestick here, so yeah, this may be all that we're gonna get, right? This candlestick, look at that. It trades right back into that midpoint. No candlestick had done that. This is the first candle that gets above it. We don't get near it. This candlestick wicks perfectly. I mean, you can't be any more perfect into that. And now we've actually displaced and closed above. Did we close above these equal highs? We did. Okay, so that to me means that we're probably going to maintain the bullishness that we spoke about using first presented. This becomes a breakaway because the breaker is here. That's what we just delivered into. So we're hitting the breaker, we're hitting the low of the first presented, we're hitting opening range of midpoint to the tick. And now actually, if we did leave this fair value gap, that may be what holds us, right? So then first presented with the most recent swing low, that's also the midpoint into the relative equal highs up here potentially. Because NQ also now with that same candle was able to get above its first presented, and now it's trying to hold that as well. So this may be it here. Watch that. What's the stop loss there? We may try that. What's the 5? Ooh, because that's a 5-minute fair value gap too that we just traded into. Did we invert the 5-minute at the same time? Oh, we closed on its high. So we may actually have to reassess this. I don't know if we're going to get that. At this point, I might not want this. I really want to see if we close above this as we're returning back into the weekly fair value gap. For the time being, we have not. So we have this bullish that was created as we are leaving the first presented. That's going to be a pretty key area. I actually wouldn't mind that. With the stop loss below the swing point that delivered into the 5, we can actually go under the 5-minute. If we can get a candlestick to close above, I'd feel a lot better about this entry here. Let's see, candlestick closure above. I'll go ahead and throw this entry. We'll readjust. If we're going to be, that'll be 3 there. Okay. Side here, equal highs up here. That was a little bit too clean. Untapped inefficiency as well, which will give just added confluence that we could try to get up there. We do. We'll try this here. Okay, so we're going to readjust entry. At this point, I would want that to be a breakaway gap, right? Go to a higher time frame chart. Purely a wick. So we wick into the volume imbalance. We displace away. We leave a 5-minute fair value gap. And we trade back down into its consequent encroachment. Closing now above highs, closing above consequent encroachment of the opposing 5-minute bearish fair value gap. So yeah, I think first presented now at this point, I would want to actually see that hold us with this new protected low being respected. Once again though, if we're going to maintain true bullishness, this fair value gap may be all that's is used. So we may not get that retracement because now we've inverted the 1 minute. So maybe the 1 minute will act as support and just accelerate price right into the buy side and buy side, which if it does, cool. We're following it pretty cleanly. I'd like a quick potential retracement here. Have to be wary because this may be a balanced price range, right? So if we were going to look from the high to pretty much the low here like this, let's take the high, the equal highs and take the low. That's kind of the price leg that we were consolidating within. Right, and there are no inefficiencies in this delivery. So from this high to this low, any of the inefficiencies have been repriced and rebalanced efficiently. So now that we've left that high, this fair value gap might actually be left open because in theory, it's already balanced here, which is why I'm thinking if we do want to maintain that bullishness, the high of this inversion, and more importantly, the actual highs here are going to be what holds price. And that's what we're kind of seeing, right? We close above it once, we wick down. And now look at the bodies respecting that. Wicks respecting it. We close above. So now I'm expecting that the actual high may be what we use as we deliver in the buy side. Didn't get tripped in for 1 tick. Rip. Yeah, close. Barely missed it. Let's see what the 5's up to. 5 minute is now inverted. So yeah, we may not get, let's go to the actual 5. 5 minute is here. 5 minutes consequent encroachment is the low. It's the 5 minute right there. Control. Yeah, look, the bodies hold that perfectly. Bodies hold, wicks do damage into the lower 5 displacement. Okay. I like that entry point here. We're going to leave that. Going to move the weekly. We understand we're within that. Just taking up too much space. That's the weekly low. Would I consider 1011 OB, 1011, 1011, 1011? I mean, I wouldn't use the OB. I would use the 5 minute inversion. Understanding that that down close candle is kind of paired with that, but I would use the fair value gap itself. Like as we're saying, if we're going to maintain this bullishness, really these highs are what's going to hold price. So you can enter like that, stop loss below the 5 minute. If you wanted to be extremely safe, it'd have to be below the first presented, but I think we can almost go like this. So we said we're not going to want to give the retracements. Yeah, no retracements. Okay. Yeah, very low probable. Right, if we're going to look at true order blocks, we want those order blocks to, 1, not have any upwards wick. We want those to clear some form of short-term liquidity, and we want them to be returning into a predetermined discount. Like these consecutive down close candles here are an order block. So when we get above that, that's why this is holding. Right? And it's paired with a fair value gap. So we see this order block hold us, and now we get that run higher. There it is. I'm honestly still going to leave this entry because I like the idea that we may actually still be able to retrace, hold, and run. But so far, I mean, price is really delivering as we would expect, right? It's holding the most recent discounts formed, and it's not giving the deeper retracements. That became the breakaway, so I wouldn't want to see that still. This would want, I'd need that to be the protected low for the time being. Maybe we can pick up some lows here on the way down. So equal highs, if we can hold these equal highs, give the retracement into entry, that'd be nice. Got to be wary though, as we said, 5 minute has now become the inversion. So if price doesn't even want to get any lower than the high, that's all that it may do. And it looks like we're actually going to create a little fair value gap in there, right? Notice that. So as we leave this, we're going to create a 5 minute. That's pretty important. That's leading me to believe we may not actually give that deep retracement. We may just keep pushing up slowly. Yeah, okay. Let's see, let's see. NQ trying to get outside of its opening range, so NQ still struggling to actually get above its opening range. ES has already done so, and that's why we're using that as support. Right, that's also why I'm thinking this may not be, we may not get that, which would be unfortunate. Cleared the buy side. So after we clear some form of short-term buy side, you'll often see price retrace into untapped inefficiencies. This is where I try to get long. We're going to use a 5 minutes midpoint. Same idea, use the 5 minute low as well here. How do you distinguish breakaway versus retracements? Yeah, so for us, right, it's kind of looking to the left and seeing what price has already done. So like for this one, we want it to be entered on this fair value gap. But we explained that if we're going to pretty much respect, right, the higher discount in the form of this first presented and then break again, these would actually become breakaway gaps because price is already, right, traded below and back above. So it's balanced within this area. That's like technically the 830 level, especially because we've already had consolidation. 830 is balanced. So when we create fair value gaps that are aligned with, right, those balanced areas in price, that's when we often see those become breakaway gaps. And that's why we were saying that if we're actually going to maintain this full bullish delivery, the first percentage is all that's going to be needed to hold price. And that's what we see here. For that reason, that's why I'm also thinking that this, let's kind of hide, it's getting a little, right, like this 1 minute fair value gap where we're trying to enter would also become a breakaway gap until buy side here is hit. Because if you notice, as we spoke about, these equal highs down to this low, that whole area in price is already balanced. So when we displace and close above it, there's really no need to return into this inefficiency until objectives are hit. And that's why we see that become a breakaway as well. Right, it's just using instead the higher time frame reference points. So we close above the 5 minute, we use that 5 minute. If I bring back the opening range gap, we close above the opening range gap, and now we use that. Conversely, we've closed above the buy side. So honestly, I'm just looking for discounts to continue to hold now, especially because notice from this low to high, there's really no inefficiencies. This is all perfectly efficient price delivery. Candlesticks are going up, retracing down to the previous low, right? All of these candlesticks have wicked into the previous candle's delivery, which means it's just immediate rebalance, efficient delivery. So we would kind of expect a slow grind up if that's going to be the objective, right, into these equal highs, which I think that's what price is wanting to get to. 2 minutes closed above that swing point, 5 minute has closed above that swing point, 15 minute hasn't, but the higher time frames are now also starting to show that bullishness, closing above swings. We could still get an actual retracement into the opening range gap. The daily lows on ES and MES are different. Yeah, see, that's kind of why I like to trade purely the ES chart. That 2 minute was clean. Okay. So yeah, 2 minute breaker. Let's clear up. Yeah, we're getting crazy. Let's clear up. I don't want that or that or that or that or that. 5 minute there. I'd almost want to just use the 5 minute itself. Low hanging fruit entry. but notice how that old buy side is going to act as support. All right, so far still holding. Just respecting those areas. NQ gets above, it closes above its opening range gap for the first time. The very next candle closed back inside though, however, so negating the previous candle's action. It's just closed above again with a bullish volume imbalance. So this may be where we see it run. Watch that here. We try to close above it once, next candle bullish volume imbalance negates that. Closing above it again, see if we go back to back, leaving that volume imbalance open. ES, as we said, old high is going to act as support. There's no inefficiencies in any of this price delivery. So if we're just going to slow grind, it's just going to continue to respect the down close candles and the new premiums that are becoming discounts. So I'd watch these equal highs next, and then I would watch actually the midpoint. Short-term swing. Still wouldn't mind, like if we fall short of the equal highs, looking for a retracement into the 5-minute. Okay, so once again, as we say, if we're just going to be true to this order flow and delivery, the volume imbalance here will not be breached, and this swing low will hold. We might get a wick lower, but the bodies won't make an attempt to get below this volume imbalance, especially because liquidity void true. So when we open up with this candlestick, no attempt to come back down into this candlestick's closure. It's going to be a very key area in price. It's also trading above, right, the down close candle that was aligned with the buy side. So like, yeah, if you were going to try to force something right like that, like we shouldn't even get below this down close candle. If we're just going to keep pressing higher. Up 400, yes sir. All right, good morning right there. You just take it and bounce. We'll be back probably like, I'm guessing around 2:30 p.m., a little bit before power hour starts. Cool. So still pushing, respecting what we should expect really. We now have that fair value gap that was created, so that should once again hold price. If anything, it's just going to keep running into the high. Just like forecasting the potential bearish move. I'm thinking like, because there is no inefficiencies in here, that would be pretty low resistance liquidity run if we wanted to run those. So like if we run out these equal highs and even hit, oops, and even hit the weekly fair value gap, and then we end up inverting this area in price, I like that for shorts. Because it looks like those highs, yeah, so our objective is about to be met now. No entry, however. Maybe, let's see if that holds. But I think at this point, we'll just hold from this volume imbalance. If we're going to give any type of retracement, should attack the buy side. Playing around it. Let's see. And I would think, right, midpoint. That's kind of what I'm looking at here. Boom. So there's buy side. Let's see if we push right for midpoint. As you said, if we can somehow, oh wait, I have two errors here. Move that one. If we can somehow actually invert this, I don't mind trying to take that short, because the longs end up playing out. We didn't get the entry down here. Instead, we used the 2 minute low, high, lower, low displaced, 2 minute left behind, right? 1 minute as well. We said that the first presented would then hold us. It does, it accelerates. 5 minute gets inverted. That's support, opening range gap support, and now should get midpoint up here. Closure above, yeah. So just bullish, continued bullishness. I like midpoint. Once again, you're gonna watch, okay? Areas like this are gonna become support. So the old highs, especially because we've actually closed above that volume imbalance or the fair value gap. So I would watch and expect that if we're gonna tap this buy side, it's pretty much gonna hold price like we saw here with the bodies. Wicks might go a little bit lower, but you would not expect bodies to go any lower. We'll move this. Objective's been hit, so we just miss it. That's fine. Same idea though, if we can get under this, right, and this gives way, so we purge and immediately revert, close back below. We don't have any fair value gaps, let's see. So really nothing, yeah, we'd still have to wait for this, in my opinion, because we can come back down into here and still hold. But for the time being, we'll see what we get here. About to be 10:30. So the morning range will be put in. We got below it, so now I'm going to watch. Does that offer us resistance again? If we're going to purge that liquidity and immediately close back below it, this price basically going to struggle to get back above that. And if it does, and we can invert this, I actually wouldn't mind trying to just take a little counter trend short back into the first presented using that liquidity void. It's all based on the fact that we get under there though. We can keep pushing higher and we just wouldn't be able to be involved. Okay, so 2 minute. We're using the 2 minute here, right? Because this is the 2 minute inefficiency. On the 1 minute, we got below it, but 2 minutes still holding. So I'm gonna wait and see what the 2 minute actually does, because that's the true 2 minute inversion as well. 2 minute closes right on its low perfectly. Interesting. So that still may actually can run lower. Let's see what we get. See if we can hold that. Break below. Oh, excuse me. Break below. I like that. 5 minute potentially. Right, we have that little fair value gap as we mentioned. So we have some untapped inefficiencies if price wants to give us a retracement. If we're coming up for this high though, we may just continue that slow grind up. We're starting to move a little bit away, right? So it's going to get tough to find entries just because we don't have much to use for stops. So we'd have to rely on, like if we're going to try to go long here, if I was going to blindly go long, I would probably use this volume imbalance and this down close candle here. This low, equal highs, closed above. 5 minute. Yeah, if we were forcing, right, this is where I'd be looking. So if we're going to continue the bullish delivery, that liquidity board should hold. As you said, in the short term, we would expect price to run back towards that if we're going to close back below. We've just tapped it, so let's see. If we do invert that, I wouldn't mind actually trying to get it a little short-term short. Short-term short, I love that. And this would be very, I'd probably even just go one to two, if that. Don't need to have huge RRs. Yeah, right, pullback would be kind of expected. Short-term retracement. As we said, this 5 minute that we invert, we never come back into it. We close above here, we make an attempt, we fall short, so now we actually have another 5 minute bullish attached to the 5 minute bearish, which is what I'm thinking. If price doesn't want to just rip for these highs right away this morning, we couldn't get that retracement lower, which is what we'll try to kind of capitalize on. So there we said, there's volume imbalance. This is where I would expect price to hold bullish, which is why I'd want to see if we can't try to reverse that. If you're going long, it would be from here, as we said. Stop loss below this down close candle here, underneath the buy side liquidity. And then we would just run up into midpoint first, and then eventually maybe like these highs right here. But I want to see if we can't invert that. If we don't and we maintain bullishness, cool. We'd want to see then if we're going to close above, like if we close above the 2 minute, again, after respecting here, that should actually hold us and continue to trade higher. But let's see if we get a quick little sell-off. Okay. 2 minute. Back into it, respecting. Bullish displacement, as we said, volume imbalance will not want to be breached lower if it's going to maintain bullishness. So now we see, are we going to accelerate right back above the liquidity here and that fair value gap, which if we did, that should continue to hold us. NQ already cleared this high, so I think ES is going to catch up to that. I see that more as a sixth sister and not really a SMT. Nice, so that holds beautifully, awesome. Closure above the buy side, back inside. I'm gonna see if that now offers us any type of support, leaving some type of fair value gap here. That's what we would expect to see if this wants to resume bullishness now. That was all I was gonna give. Retracement into down close candle paired with original liquidity. True liquidity void, perfect reprice into that, right? That's why I'm thinking this is more bullish. Doesn't even make one attempt to get below it. Perfect into the low, again, perfectly into the low. Displacement, see if that fair value gap gets left here. 2 minute wick. So we'll still wait. We can consolidate here. We've moved a decent amount, and I still would rather favor trying to capture just a slight retracement. As you said, this is midpoint of weekly. I'm yawning too much, man. I ran out of coffee this morning, couldn't make my coffee. So now what our expectation would be is if we're going to close above the 2 minute, right, we should accelerate. True, man. Too much is bad, huh? Just started a few years. I never drank coffee for like 20, till I was what, 20, I would say 26, to be honest. I always thought it tasted gross, and then I got into it a little bit. Now I like it. Can't do it too much, so I'm not trying to get reliant. Like people say, like, right, if they get coffee headaches or whatever, if they don't have caffeine. I'm not trying to make it to where it's like that. That's bad. Never have, dang. Never have, never will. They say it's the most used drug in America, which is true. Caffeine. Okay. So just playing inside that 2 minute. We're not surprised to see that. That's rather clean too. Yeah, if we can't break lower, we're going to try that. We're going to short. If we can get closure below the volume imbalance, we'll try that. Stop will be the actual weekly fair value gap midpoint, and I wouldn't want to see that before we run back down into like the 5. That's a little bit deeper for retracement. Let's see. More than pot? I think so. If you were to ask, I guarantee more people, it probably goes like caffeine, nicotine, then THC, I'd say, if I had to guess. Just because it's so widely accepted. Right, THC isn't there yet, getting there. Or I guess alcohol too. I didn't even think of that. He said too much pot is good for everybody. It'd be a lot more laid back place. I think every politician should be required to smoke a joint a day. They need to relax. Okay, so yeah, we're getting choppy here. We understand what we're referencing though, because we've now rebalanced into the true liquidity void here. Once again, we're following this. This area is balanced. So if we want to actually maintain bullishness, it's not going to make an attempt. It's going to use the most recent discount, which is the fair value gap. So the C price slam into that, bodies can't get near it, and then we immediately revert into the buy side. To me, bodies are telling me that we want to run highs again, and we're probably going to come for the midpoint. We would need to be pretty quick in this displacement below now. Right, so if we're going to actually displace below, set up some type of short, it would need to be a quick movement and closure below the volume imbalance. But for the time being, bodies to me are a little bit more bullish. It's nicotine, alcohol, then pot. Okay, yeah, that's fair. I could believe that. What's the best way to chart ES and enter on MES? So for me, what I do if I'm entering micros is, right, I'll basically pull up the chart or frame the setup on ES like this, and then I'll just use the same price levels in MES to enter on. So like, let's say that we were going to try to, I guess let's say that we were just in this long, just to like give an example. Like if we were in this long or whatever, kind of as we spoke about, and we were targeting up here, I would have these key areas on my price, like the price levels, 60, 58, 75. And then I would just mirror that to the micro chart. Right, so that's here. So sometimes it'll have the same inefficiencies, right? Like in this case it does. Sometimes it doesn't. But yeah, I just mirror it to whatever the actual entries and exits are on ES. Just like that. Because yeah, sometimes this chart will move just slightly different. It has like different volume imbalances every now and then. So I just tend to rely on the true chart. Okay, so consolidation at equal highs, that's to be expected. Pretty much almost like, right, treat these as if this was a daily swing point and we had a large run up into a daily high. We would expect consolidation. The market is fractal, so it's going to happen on every time frame. Right, so in this 1 minute, strong area of buy side, we create a bullish leg into that. Consolidation is to be expected after clearing that. Now it's a matter of whether or not price wants to continue. So consolidation to continuation. Or if it's going to want to consolidate and give a short-term reversal back into now untapped discounts that were created on the way up. And as we said, the only true discount in this 1 minute delivery is this fair value gap. As soon as we close above, right, every single one of these candlesticks has been efficiently rebalanced. No inefficiencies. The only one was here, but we've already perfectly now repriced into that, which is why I would believe if we can get underneath that, it should set the stage for a run lower. Yeah, if you're long, you could hold a weekly fair value gap point, right? The 5-minute high. That was the setup. The actual setup was the 2-minute. Low, high, low, below, displacement, bullish fair value gap, perfect delivery, trade above the 5. All right, see what we get. So there, we need to see closure below. I'm not really worried about like the original entry, right? Because it can still hold the body. So we need bodies closing. So that one try is interesting. It closes on the low. Notice where we opened though. We opened with a bullish volume imbalance, perfectly aligned with the original here. So to me, this will be the one candle chance that it's going to negate this candle's actions. So if this candle comes right back up in the buy side, that's just not a good sign, right? We're just going to stay maintaining choppiness, or now we'll get the actual bullish run. So let's see. If we can almost negate that bullish volume imbalance and this candle closes bearish underneath the volume imbalance, that may be good actually. But I think this is more so, right, just baiting, running out to lows, snapping right back into the bullish volume imbalance. So it's gonna want to maintain this range, in my opinion. If anything, it's gonna, now that we've cleared these lows, it'll actually come for these highs up here. Bearish fair value gap, so I am going to watch that and see what we do here. If we can hold that, displace below the volume imbalance, I like that for entry. I would not try to go short here at all. To me, nothing is really flip bearish. It's all bullish. We're just running out short-term stops. That premium, if we're bullish, is going to be a false sell signal, and it's going to be inverted and then used as support to get us into the weekly fair value gaps midpoint. Now that we have cleared the equal lows. And as we said, bodies refusing to get underneath the volume imbalance. That's no surprise. That's going to be the balanced area in price. The wick, however, does do the damage, simply returning into the original liquidity pool that we've cleared. So that's pretty much what we would expect to see. As you say, even in choppy conditions, price is referencing very specific levels, so we're not confused. So now, yeah, inversion there, closure above. To me, we come for the weekly midpoint now. More than likely from this potential inversion. Let's see. Because we've done the damage of clearing out the equal lows. So now it may be allowed to release. Testing the inversion. Let's see what inversion gives. Perfect inversion, yep, we hold. More than likely, if we maintain buy side as well, close above consequent encroachment, expansion will be following. 15-minute. Yeah, we do have a 15-minute as we've left the opening range. But those are kind of what become breakaway gaps until we reach like higher time frame objectives. If price doesn't want to retrace, or if it has plans of like retracing into that, heading into the afternoon. All right, so yeah, we do have this. But my expectation would be it's probably going to run out a high again before it would retrace lower. If we can get the break below, however, I still would like that. Try to short. But yeah, in my mind, we're going to run for highs right now. Because we've cleared the liquidity, we've respected the discount, we've displaced above a premium, we've respected it as now an inversion, and now we've opened with a bullish volume imbalance above midpoint of the inefficiency while respecting the original buy side pull. All that to me leads towards bullish price delivery, to be honest. If we can somehow hold the high of this, which we are, and then revert, that'll give us a chance. But if I had to guess, I'm thinking discounts want to hold. 2-minute volume imbalance was formed as well. 5 minute, pretty ugly. 5 minute volume imbalance. We do have that inefficiency too on the 5 and the 15. It's kind of one and the same. But we may get a short-term high first. What time is it? 10:47. So we'll chill out till about 11, and then we'll come back for the afternoon. Because really that was kind of my objective, right? That was what I wanted to see price deliver into if we were going to catch the longs. It does deliver it. We are unable to get involved, however. But that's kind of why we're seeing this consolidation now. If I had to guess, though, I'm still thinking midpoint. Right, look how we're respecting that. Yeah, so we're continuing to respect the low. Inversion. Buy side. Fair value gap. And there is, wait for it, midpoint. Oh yeah, well, that's how it is now. As I say, I don't really ever care about missing trades at this point. There is always another setup as long as our analysis is correct. That's all. Just want to be in sync with the market. Right, the opportunities, the entries will come. As long as we're on side with the narrative, that's really what matters. Okay, so yeah, pretty much, let's see. Yeah, that's gonna hit that. Cool. So as you said, right, that would be the long. And we would not want to return below this candlestick. Because as we trade up into this liquidity for the first time, we're creating a wick. As we trade through that wick becomes a gap, right? We see it in the same light. So we've created a bullish fair value gap aligned with original liquidity. Lo and behold, look at the candles. No surprise there. Perfectly into the low. Perfectly into the low. We move away. Now we hit the high. We did fall short of this, however. Let's see. I think we just used a 2 minute as support. 2 minute did not close above. That's interesting. Let's see what this 2 minute does. I would still favor one more stab up into that, but we have cleared these highs. So if we can maybe retrace from here. Potential. We have potential. Interesting. Okay. Just gonna watch this. Simply just hitting the inversion again, so we still can hold from here. Right? I'm not getting shaken out. We're just returning back into this. Body's holding it perfectly. Continuing to reference original buy side. So yeah, just getting choppy here. $10.50, so we'll see if 10.50 wants to give us something, a little macro time. We're accumulating the longs or the shorts. I still think if we can break below, I like shorts. Placement, breaker holds. 2 minute held, 5 minute. 5 minute inefficiency, holding bearish. 15 minute rejection block. Had we tapped this weekly midpoint as we ran these highs, I would almost be trying to short already. But the fact that we could not get that, to me, makes me think we're going to want to give one more run off of the inversion. Just going to be high resistance. pretty much just expecting the fractalized delivery of like what we had here. Where we create these relative equal lows, we retrace up into a premium where we consolidate, we then run out those lows and displace above the high using the discount now to give us another run higher. We have the relative equal lows that retrace up into the premium where we consolidate, we then get the run lower where we displace back above the highs and retrace into the discount. Right, so pretty much the market's always going to move in the same way. It's just a matter of being familiar with the fractalized version of it, which is why I would believe more than likely that midpoint should be hit. If we're going to get back above the 2 minute again, 2 minute unable to close though. So that's why we need the 2 minute to close to truly get like the release, in my opinion. 1 minute is closing above, sure, but if we're going to use a 2 minute fair value gap, you need the corresponding time frame to confirm that. So we need the actual 2 minute to close to classify this as being breached, and now we can use it as an area of support. We did close above it once, but the very next candle immediately negates that. That's kind of what I would refer to as like the one candle chance of reverting the previous candle's action. So now that we close above again, in my mind this will be the release into that midpoint. If we close above, need to close above it though. So we do close above it, right? The 2 minute has closed above. So honestly, I would expect that to now act as an area of support and accelerate us into the midpoint. If not, and we just keep chopping here, as we said, that's kind of expected because we've cleared pretty much our objective of the equal highs. And now we're going to be at a higher time frame midpoint, right? So the weekly fair value gap's midpoint. Consolidation can be expected around an area like that, especially if we've already cleared buy side. Let's just go on nothing on the chart for the time being. I would still expect highs. Run out them highs. It's good long. Yeah, we should run higher, right? Like, you could tape read this. In my mind, this 2 minute will hold us now. Especially because we've got underneath it and we held that discount. So you could tape read something like this. Just tough because our target was the midpoint. So if you wanted like 5 handles, I don't know if we're going to get that much of a run, but it would align with this inefficiency. So if we want to do, or if we do want to come back up here, that's a good area to aim for. Off of that 2 minute now. Because we said the 2 minute has actually closed above once, twice. So that's kind of true confirmation. Whereas here, close above it, immediately negate that. Close above it, confirm the closure above, and actually open with a volume imbalance. So now I wouldn't mind trying potentially that, right, with the most recent swing point being our protected low, which would be here. And maybe try to get up into that. That's just a little bit higher than I would expect for the morning, but it could do that. So we can, yeah, we'll follow that the next basically 10 minutes during this macro time. And we would expect that low to hold us. See if we can't push, leave the volume imbalance open, clear the weekly midpoint, use that as an area of support once we get above it, and then accelerate us into the inefficiency here. We never get into its midpoint, so that could be a draw for sure. There's the midpoint. Look at that closure. Jeez, very random, right? We close exactly on the weekly fair value gap's midpoint. We leave the volume imbalance open. So yeah, we should just continue bullish. Right, price is bullish in here. That's why we need to be very specific if we're trying to short, because that's going to be counter trend. So we said we would watch the 2 minute. We've already used it. We may want to use it again. Fair value gap midpoint is going to be a key level in price. Let's see how we close. If we close there again, that's just nice to see. Very pretty. Looks like we're going to hold that perfectly there. Yeah, that's nice. Okay. So we hold that. Swing point. Let us see if it wants to invert. If we can actually get below the 2 minute, maybe then we get a little sell off. Data highs for 500 Apex, I'm guessing you, instead of Alex. Oh shit, okay. I was like, what? That's funny. Data highs for 500. The classic Jeopardy. Vanna White. Oh, you just doxed yourself, remember? Your name's Alex. Now we know. What's up, Sasaki? Hold up. Shorts. The weekly fair value gap is this, what I'm talking about right here. Oh my, why is that showing up on the... Oh, that's why. Oh my, hey, chill out. But no, the weekly fair value gap is here, right? That's what this is anchored to. So now in the 1 minute, if I was to just bring this all the way back, that's what we're hitting, right? You see that perfectly. I mean, once again, you can't argue. I guess you could argue, but you'd be silly if you tried to. Like, it's just too precise. So if we do close below that, this is just causing me issues. Like, I really would want to get below this because we could still chop in here. But already, like, that could be a high risk entry. Maybe we try that. High risk entry. Let's get back-to-back confirmation though, because we opened immediately with the volume imbalance. That's how you get fooled out. We closed below it, but snap back right inside, so we could easily, boom, run for that high again. But if we can back-to-back hold that, we'll try to use the volume imbalance with the most recent swing point that is above the weekly fair value gap's midpoint, and we can just go a quick little retracement like into our opening range gap again. We won't even need to come back all the way down into this 5 minute. But we need to wait, right? Because in reality, all of this, shorts are counter trend, so it's going to be lower probability. The buy side of the market right now is what seems to be stronger. I just don't really want to try to go long in here and aim for these targets, which is perfectly valid if you did. Just for personal preference, I prefer trying to go against the trend for the time being. But we know what we're looking for, right? So it's not like we're pushing too early. We still haven't taken any trades. So we're not getting damaged at all. If price keeps running higher, we just won't be involved. And we'll see that, but for the time being, I just want shorts. Instead, right, we hold the 2 minute. That's why we say we have to wait for candle to actually close. We're about to invert this again, it seems like. So we might just keep pushing higher again. He said glad I longed NQ instead. Yeah, NQ is still going nicely. Same idea, right? No real inefficiencies either. Still none. Like, so there's no inefficiencies in this leg, I guess, besides the midpoint here. So based on our current dealing range from low to high, let's say that we want to consolidate and then run higher. This is actually how I'd probably try to engage with this. This low to the highest high is our dealing range. The only inefficiency really is midpoint of the original inversion, which is also a very small 1 minute here that was never traded into. All right, so if we're going to want to bait shorts, we'll hit this little area, we'll hold this as a protected low, and then we'll get another run higher. Price looks like it's going to just keep creeping up. Yeah, I'd agree. All right, seems bullish overall. Still really within though the range from low to high during CPI, and that's really what we expect in the mornings, which is why I try to kind of avoid that. So we'll just pretty much just be in that huge range that gets created. Yeah, we do have a discrepancy in that. If we were to close above the CPI high, then I would take that into consideration, right? And I would expect pretty much ES to just run aggressively as well. But for the time being, I'm not too concerned because we can get a retracement back into that, which would allow ES to go lower. Don't get confused. Macro sense, we still expect higher prices. Like on a daily chart, our objective is up here. We have a weekly fair value up here that we're getting stuck within, but we also have a daily up here. So that's why I'm saying, like, if we do get above the weekly, I would expect a pretty good run into the daily as well. But because that weekly is so aggressive, and right since the week has started, it's all been bullish delivery, all up close candles. I'm just thinking we might get one of these days that either closes bearishly or gives a short-term retracement, and that's kind of what we're eyeing up here. Especially because, right, if I was to drag out, hold up, there's too much going on. I want this, just a weekly midpoint. You can see how we're holding that with the candles. So we wick into it once, we've wicked it again on the hourly chart. 4 hours, same thing. 4 hours actually closed all the way back below that. Look at that consolidation right at the midpoint, right? $11.05, so we'll wait till 11.10 and we'll bounce. But yeah, midpoint, just holding. For us, best longs, we're here. Inside first presented as we invert that, creating the breaker. If you miss that one, right, as you close above the 5 minute, second opportunity. You miss that as you close above opening range gap, third opportunity. You miss that, we're still short of the midpoint. Volume bounce here we called out. True liquidity void, trade into it. Now we have midpoint. And now we get the true kind of, once again, choppy, ugly delivery. 2 minutes, still holding that pretty aggressively. This 2 minute, we're starting to get up and down through it. So now I'm starting to put less emphasis in it. And I'm kind of going back to now the key areas, which are this liquidity void and the weekly fair value gap. To where, yeah, we may still hold from here, but because of how we're moving near it, I'm not putting as much emphasis. Instead, I will look at like this volume imbalance that's created within it. If we want to maintain bullishness, this low is protected. A storm's a brewing. We got a storm a brewing. Boring, boring, boring. Okay. A few more minutes and then we'll bounce. Gonna hit the gym, get some lunch, and we'll come back in the afternoon. You missed 10. Oh, rip. I did actually have an entry set too for my TradeAvate account for that first presented that I missed on this candlestick. Also unfortunate. Right as we displaced above, swept that low, displaced above, closed above the swing high. I had a limit set to get long right on that, and this candle falls just short of it at 10.10. Unfortunate. But as we often say, right, we don't really care about that. We're on sides, we know what price is going to do. That's all we want to be. After we closed the stream yesterday, we did, wow. Okay, well, there's the objective we had. We didn't get any type of possible, oh, that would have been the entry right there. That was the only type. So we said this is going to be the key area. Notice that we close below it. We open with the bullish volume imbalance, and we fall perfectly where? That's why I just love this shit, right? It's too perfect to be argued against. Using the volume balance as support, boom, we invert that. We said that this opening range gap more than likely will be the draw from volume imbalance, no upwards wick, one swift movement perfectly into the low. That's real nice. And then we actually close. That's the original buy side or what? Oh, just a little bit under it. But as we said, the hidden kind of inefficiency is this, where the wick that we trade above that uses it as support. Boom. But no, we didn't take any yesterday. For us, we just don't really do much the day before CPI. So yeah, we did end up holding that weekly as we expected. Just no entry there. That's funny. And that's what we said earlier, right? Is that because there was no type of inefficient, you could almost go a little long right there. That'd be crazy to buy that. Nah, we won't do it. But you could have bought that. But as we said, because there's no inefficiencies in here, if we're going to attack those, it's going to be a very low resistance liquidity run because there's no inefficiencies or really PD arrays to stop us from falling through. And that's why off of the weekly, once again, very random level in price here, we create that short-term high, we trade up into the weekly to the tick perfectly, and then we start the breakdown. Nice. So pretty much we're just back at previous day high. That to me is bullish though. As we said, I think we buy from there. You could have almost just bought that right away. Yeah. Speed will be met with speed as well. So like if we're going to run these highs now, it's just gonna accelerate quickly. Anyone that was short in here, it's gonna try to pretty much throw them off. Previous day high held perfectly. Yeah, that would have been clean. We'll see if the opening range gap high holds. And we close on it. Once again, just perfect delivery. That's crazy. Real nice, real nice. A 5 minute. Ooh, 5 minute has actually closed outside of the weekly fair value gap. So maybe we do get a little, let's see, short-term retracement. We are not going to give China our best chips. What in the? Is that what he said? What does that even mean? Our microchips. He said there goes the creeping up. That's funny. Hey, as you learn over time, the price takes the stairs up and the elevator down. That's a very common occurrence. All right, so stairs up, slow, methodical, up, up, up. We take in the stairs, and then in one swift movement, boom, elevator, right down through it all. But I still think, like honestly, I would almost try to, you can use the opening range gaps high with the expectation that, let's see, that wick, the low of our weekly fair value gap can hold. Which is also the 5 minute invert. Maybe we try that. That's going to be high risk as well. Just curious. I think we can get back up into there. 11:12, a little bit later. We might just try a little paper here before I head out for the afternoon. So I like that. The only issue is we have this premium here, but to me, this is kind of a premium I would expect to get traded through. Like, I wouldn't trust that that's going to be a true bearish. Can you guys hear that? It's absolute dumping right now. We're going to try this before we head out. So we're going to try to basically, we want this to be a short-term speed bump that will hold price in the short term to send us back down into our opening range high, where we can then try to get long with the expectation that the weekly fair value gap's low, which is here, right, should protect us. If it doesn't, we'll just be offsides. That's fine. But we'll see what we get. It'll be one of those things where, because this was a pretty aggressive move lower, if we're offsides, it will fall through quickly. So wrong or right quickly. But I like the idea that we've cleared that liquidity, we've respected the actual first presented, we've displaced above the opening range. I thought it was a train. He said, no, it started out of nowhere. It's dumping. I usually walk to the gym, but nah, I'm driving today. I'm driving them 100 yards. I ain't getting wet. Very relaxed. I agree. Maybe we do that. Just rain sounds in the background. So yeah, this will be our only entry here. And then whatever happens, we'll skedaddle. I like midpoint though. Potentially retracing into midpoint again. That's the sound you used to sleep. Hey, I used to do that too, honestly. The late night sleep sounds. I got my girl a Hatch though, so she uses that. And it has nice sounds on it. The brown noise. I'm a brown noise guy now. Okay, so we got entry there. Now we want to see displacement, right? So we hold this originally. That's what we wanted to see, is that we want this to hold us to send us into entry, but now that we are entered, we want to actually displace above that, invalidate the premium, turn that into a form of support to where we can then look for, we'll just go weekly fair value gap. So it doesn't even need to be the high again, but what's 5 handles actually? We may just go like a 5 handle pull and dip. Actually, we might do that, because we only need to get we'll close most of it at 5 if we can get there. Just because this area is giving me a little bit of hesitation. I don't like that. I don't like that at all, actually. We would need to see quick displacement through, right? We want speed to be met with speed, so if we start consolidating inside of the displaced fair value gap, that's more conducive towards another run lower, because we're starting to respect that premium now, where we've already displaced. If we're going to have speed like this and we want to see that be kind of negated, we want to see the same speed and momentum be delivered on the bullish side. So now I'd want to see, now that we've closed on that, I'd like to see price make an attempt to get into the high of that fair value gap. As we said, right, 5 handles would get us right here. We can even go 6 if we want, but we don't need to, because that is the... that quarter level is 5 handles exactly. So that's what I like to see, right? When we can overlap potential areas of profit with key areas in price. So we're going to sell 2 right there at 5. Stop loss immediately will go break even, because I'm not trying to give anything back in this trade. So we'll immediately break even at this point. And now final exit will just be, as we said, that weekly fair value gap that's right here. Cool. So we have risk free. Now we can just chill. As we said, we want this to be displaced above. We want to see the midpoint hold. And if we get stopped, we're at break even after securing 5 handles. So I'm fine with that. I like that we closed above the consequent encroachment, so we should hold consequent encroachment. And we should be able to accelerate into the high of this fair value gap. After hitting the high of it, we may see some type of hesitation once again, because we do have this. And this will be the first time that we're coming into that as a potential inversion play, or I guess reclaimed, right? It creates bearish, we invert it bullish, we reclaim it bearish. That'll be the first attempt into it, is now a reclaimed bearish volume imbalance. So that is where rejection could occur. We probably should have just closed there, to be honest. but we're going to be greedy. I like the weekly fair value gap. Let's just see if we can't tap that level again. If we're being honest, ooh, yeah, that's very hideous. Okay. So we may miss, we may get stopped, but that's okay. We want, as long as we can maintain this, if we can maintain that midpoint, which we did, volume and balance. Okay, what's a 2 minute looking like? We may just actually, we can even cut more risk, to be honest. I'm gonna go stop right under this candlestick. That's right here. Bruh. Ah. Oh my, I hate that. Okay. Stop and profit, because in theory now we have bullish fair value gap, we have original volume and balance, bullish fair value gap, midpoint, and another. So if we negate all of those discounts, I don't even want to be in it. We should just continue to push. As we said, we want speed to be met with speed. So as we push up and through this, I would not want to actually see any retracement. Once again, that volume imbalance though causing us pretty big issues. Perfect delivery into its high. So now that we've hit the high perfectly, this is where rejection would occur. So we should have a pretty good indication once this next candlestick forms. If we can leave this volume imbalance open, what I would want to see is now for the body to actually hold that. So we're going to have competing PD arrays, competing volume imbalances. We have one here and we have one here. We would want this one to hold the bodies and actually displace and close above the one that we're running into on the higher side. Because if we put this in as a short-term swing point, if this becomes a swing high right here, this one candlestick, that's not really a good sign, right? Because we've hit the low of that volume imbalance, we've hit the high of it, closed below. In theory, that now has been balanced. So if we're going to hold the high of it, not make an attempt to get through it, we may actually roll over on ourselves. So we'll see. So far, so good, holding the body above this volume imbalance. We can wick into like midpoint or even this fair value gap. But to be honest, I wouldn't really want to see bodies give up this little volume imbalance that's right here. Looks like we're going to have that be the swing high. If that becomes a swing high and we close below this in the same candlestick, that'll be negative. We're able to actually maintain that, but as we said, that swing high has now been put into place, which could lead to a short-term reversal back down into some discounts, which may then stop us. So we'll see. This has to be basically the last line of defense for me. Anything below that, stop loss. As we said, we can wick lower. Body's really telling the story. So if we can somehow wick this and keep the body above, that'll be a pretty good sign actually. And we may get the run higher from there. Okay, and we're looking at this. This is the discount we're speaking of, this little fair value gap, as well as the midpoint of this potential inversion. We've closed above it, which is why I would like to use the midpoint now. We have not closed above the fair value gap, so it's not truly an inversion. This is more of anticipation. So we did hold, okay, so we're able to hold the fair value gap, but the fact that we close under the volume imbalance to me means that more than likely, as we said, this swing point is going to be the protected swing. And then we might just want to revisit our opening range. If we do, we'll be stopped because, as we said, this should be the last line of defense. So I'm perfectly fine where the stop is at because it's a very key and specific level in price. I like that a lot, actually. If we can hold midpoint even after this, because now in the same way that we did up here, right, we perfectly rebalance that. If we can come back down into this, hold that, close above, we should respect that. Matter of fact, let's see. Because that's two handles, like we don't need to push for that. It would be nice, but we'll just close right there. Take what the market gives. So if we want to retest that volume imbalance, because we can kind of start getting stuck here. In case we just start consolidating like back and forth within this, that's an area that price should at least make an attempt to retest. If not, we'll come for this low and we'll be stopped in profit on the remaining balance. We need to get above this now because we've inverted that, so that's going to be an area of concern. We don't want to see that. Look at the precision though. Never gets boring, to be honest. Just love it. Absolutely love it. There's also a bearish fair value gap there, so it's kind of even more important, because that's going to be a premium that is created after creating a swing point. We create a short-term swing point, we then create a bearish premium. That needs to basically be negated. Trade back up and try to get the high. I like that we're still holding midpoint. As we said, volume imbalance, last line of defense for us, holds well, perfect delivery into its low, perfect delivery into its high. So now we have opposing swing points. Swing high here, swing low here, both formed within volume imbalances. For us, as we said, we want this to be our protected swing low. And we want to make an attempt to clear this liquidity. We don't even have to actually get there. We just need to try to get back into this volume imbalance that's right here. We'll be able to get out. Closure above will be a good sign. That's not a good sign. If you wanted 5 handles, you would close right there. Right, that's 5 handles, so that'd be plenty. We're trying for this volume imbalance. I think we can get there. I like that. And that's also why I take partials, right? Because it allows you to just hold without any type of emotional investment. You've paid yourself. Stop loss in profit. It's a win-win. Holds that beautifully. Bodies are starting to make an attempt, however, so yeah. This needs to be our protected low. I wouldn't even want to see a wick go try to wick through that, but it looks like we're going to want to. Yep, right towards it. We would need to see that volume imbalance hold. Okay, that's fine. We kept that low. The volume imbalance is what I'm looking at. If we get underneath that, close beneath that, candlestick here. Yep, okay. So as we said, this inefficiency fair value gap we can wick into, but if a body closes below that, more than likely we'll get stopped here. We ended up running that low. Not a big fan. We need to reject quickly. To me, this seems more as a bearish though. A bearish run lower. Cool. Hey, we're fine with that. Stop and profit on the remaining contract. So we'll leave there for the afternoon. That was the only thing we took, right? That's it. Patience. We sit here, missed a few entries, but we understand there's always another opportunity, so I'm never too worried about that. And it doesn't need to be a big home run or anything like that at all. 5 handle move, catching the swing low, running up, parceling out, stopped on the remaining balance. He said didn't secure it. Very true. Now you gotta learn consistency, as I often say. Base hits every day. Treat this like a job. You're not trying to get windfall victories, get all emotional. Something that's very repeatable, very precise, day in, day out. That's how you stay in the game. So yeah, for that, we'll be done for the morning. We will come back probably like probably like 2:30. Yeah, I tend to kind of let, like, 1:30 is the true afternoon open, but I kind of really like to wait until power hour. Maybe we come back at 1:30. What do you guys think? I'll let y'all decide. 1:30 or 3 o'clock. What should we do? $1:30. Okay. Fair enough. Yeah, we can do that actually. A little longer stream, as we said. We're trying to get the stream numbers up, so that'll help. All right, then we'll come back 1:30. So 13:30 technically, right? We'll let lunch play out. We'll see what happens, and then we'll come back for the afternoon session. You could almost buy this again if you wanted. We're not. We're done. But yeah, at this point, I will turn the stream off. I'm not going to leave it running the whole time. So the stream will end and then another stream will start here in a few hours. Yeah, if you won't be here in the afternoon, have a good rest of the day, everybody. Oh, take care, Mike. I'll catch you tomorrow, my dog. Yeah, and anyone else that'll be here for the afternoon, we will talk then. So for the time being, take care, and we'll talk here in a few hours.